Welcome back. I hope you all had a great evening and are ready for a wonderful weekend. Stocks finished with slight gains today, even though the S&P started down by 0.8 while finishing the day up by 0.39%. The NASDAQ gained 0.79% and the Dow finished the day up 0.25%. However, it finished the week being down 2.65%. Summing up this week in a sentence, the major indexes had significant losses due to a slew of somber economic reports and increasing tensions between China and the United States. Stocks dipped early due to the U.S. monthly retail sales falling by 16.4% in April, which was a new record and came in below estimates of a drop of 12.3%. Core retail sales, which excludes auto, gas, food, and building material sales, dropped 15.3%. Industrial production and manufacturing production reports also painted a gloomy picture, as industrial production declined by 11.2% month over month, while manufacturing production fell 13.7%. Market sentiment also took a hit amid rising trade tensions between China and the United States. The Trump administration moved to block semiconductor shipments to Chinese tech giant Huawei. The Commerce Department said it would, quote, strategically target Huawei's acquisition of semiconductors that are the direct production of certain U.S. software and technology. Hu Jin, editor-in-chief of Chinese state-run publication Global Times, tweeted on Friday that China would, quote, restrict or investigate U.S. companies, including Qualcomm, Cisco Systems, and Apple, if the U.S. takes further action to block Huawei's supply chain. The turnaround today was due to the University of Michigan's Consumer Sentiment Index, which unexpectedly rose in early May as U.S. fiscal stimulus actions, quote, improved consumer finances and widespread price discounting boosted their buying attitudes. The index of current economic conditions jumped to 83 this month from 74.3. However, consumer expectations weakened to 67.7, which is a 6-year low. Getting into currencies, the US dollar ended the day negative but was positive for a while today due to the rise of consumer sentiment and fears of another US-China trade war. The sector showed us the mixed day that the market experienced. The consumer services sector led the way up, gaining more than 1.3%, while utilities clearly had the worst day, being down more than 1.3%. Barclays said that the market is underappreciating and mispricing, quote, the stability and visibility of utility earnings during the COVID-19 pandemic compared to other sectors, even though utilities have the ability to flow operating costs up or down. Oil and gas were negative as a whole, but WTI crude and Brent crude were both up more than 5% at the time of this video. Looking at the helpful table, it's clear that small cap growth stocks performed the best, rising by 1.76%. Value continued to struggle as large and mid-cap value were the only group negative on the day. Royal Caribbean Cruise Liner rose the most today in the S&P as they surged 6.54% in trading. This move came after RCL had a private offering of $1 billion of senior notes, yielding 10.875% due in June 2023. They also had an offering of $2.32 billion of senior notes, yielding 11.5%, which are due in June 2025. The other stock that had the best day in the S&P was the American clothing retailer Gap, as it surged 6%, even after the release of the biggest monthly U.S. retail sales drop on record. There does not seem to be any other substantial news that caused the gain achieved by Gap today. The biggest loser in the S&P was Lam Research Corporation, which is an American corporation that engages in the design, manufacture, marketing, and service of semiconductor processing equipment used in the fabrication of integrated circuits. Lam dropped 6.38% today after the Trump administration blocked chip shipments to Huawei, the Chinese technology champion, raising fears that the Chinese government could retaliate and hurt American companies with additional restrictions. The drop reflects the uncertainty that stocks heavily reliant on the Chinese market face as the US and China spar in the latest chapter of the trade war. The other loser today was apparel company VF Corp. Shares of VFC fell 6.28% as they reported disappointing earnings. VF Corp reported earnings per share of 10 cents on revenue of $2.1 billion. Analysts expected a profit of 14 cents per share on revenue of $2.29 billion. The company said Timberland and North Face sales dropped 18% and 13%, respectively, during the quarter. Continuing our exploration into earnings, we start with JD.com, ticker symbol JD, which is a Chinese e-commerce company. JD had an EPS of 45 cents per share on revenue of $20.6 billion, beating on both EPS and revenue. Estimates had EPS at 11 cents per share on revenue of $19.2 billion. After hours, the stock has dipped 1.28%, although performing very well on the day regardless, as they reached a new all-time high. Revenue was up 20.7% on a year-over-year basis. Another standout number was that their active customer accounts increased by 24.8%. DraftKings, ticker symbol DKNG, is an American daily fantasy sports contest and sports betting provider. Shares of DraftKings were up 15.49% today, as they reported a 30% increase in year-over-year revenues despite the effects of COVID-19, which caused a temporary suspension in live sporting events. DraftKings had revenues of $88.54 million, missing estimates by $15.83 million, and they had a loss of 18 cents per share, which missed estimates by 2 cents. They have continued to make progress on priorities, including entering new states and investing in product and technology to create more live betting for American-based sports. Lastly, we have Dennys, ticker symbol DENN, which is a popular American restaurant chain. Denny's reported revenue of $96.7 million, missing estimates by just $130,000. Denny's also beat on earnings, posting a profit of 16 cents, beating estimates by 5 cents. Investors took kindly to this news, sending the stock up 4.56% in regular hours trading and an additional 2.73% in after hours trading. Note that earnings were 36% lower on a year-over-year basis due to COVID-19. As always, thanks for watching. I hope you all have a fantastic weekend.